Hello traders, this is Dimitris Haralampidis and this is today's daily summary. A bit early, but I have to sleep a bit. I'm awake for more than 24 hours, covering and analyzing the markets during the event. Apparently, Britain chose to leave the EU. Whether this is the right decision or not, only time will show it. This video anyway is not about politics. It is about the markets, and with our yesterday's daily summary, I warned all snail traders that about the potential of such moves that happened yesterday night, today in the morning. So I consider this a success for us. Let's take a look now where we are, and let's see what we got, what we didn't got, and what we should expect from now on. In front of me it's the chart of the Australian dollar, and we see, as I said yesterday, that prices will likely be limited by the 100% expansion of wave A from wave B. We had a reversal from here, which is very common for a zigzag correction in a wave 2. If we look also on the 4-hour chart, we will see that we were very near the 78.6% retracement, something that I mentioned yesterday, and now we have a very strong rebound that occurred at the 144 period SMA. We broke above the 55 and tested, and another bounce, and now we're limited by the 21 period SMA here at the 4-hour chart. I expect this is the daily chart, and I expect more sideways movement before we have a continuation to the downtrend. But as you see here on the weekly chart, we expect much lower prices for this wave 5 that has already started here. So this is 1, 2, we expect 3, 4 and 5 much lower levels in the coming weeks and months probably. So that's all for the Australian dollar, and move on the euro. A lot of different analysis for this pair. Of course, the most traded pair is normal. We got that right too, and also a few hours ago I have posted an update where I state that we will see a significant rebound from this low. We had already seen excuse me for that. We had already seen the first part of the rebound, then we had a correction, then we have another push higher, and I believe that this will be wave E of let me show you on the 4-hour chart what I mean, on even better. Let me show you on the daily chart. This is wave D, and now we have wave A inside here. Give it some more time. Let's have another push lower and up for a wave E, somewhere below this SMA probably, and then a continuation of the downtrend in an impulsive manner, like we see here in our weekly chart. Let me show you. Here is the weekly chart. So so far we see a break of this trend line. We need to see a close below this trend line to gain more confidence that the trend has changed and we should expect lower prices. But if the count is correct, which I believe it is, then prices after completed wave E should move below this low here from March 2015. Moving on, of course, the most important pair for yesterday's event. This is the uh, British pound. The pound that was strongly bullish prior to the event, as the market were very confident on that the Britons will remain in the European Union. I was not. I was not, and that is not related with politics and my knowledge about that, because I know very little about the UK's political scene. But I was seeing the technical picture of the pound, and I was seeing this decline coming, so I expected that possibly Britons will leave the European Union. Uh, we see here a very large drop. This is about 1800 pips drop, and of course it is normal to see a retracement. As panic fades out, we will see uh, let's not talk about panic, but this is a very large move to the downside, and we know that the markets are moving in trends and not in vertically, so it is normal to see some retracement and a rebound here. Possibly some of the traders, investors will think that this is the low, this is what happened, and now we will move to new highs. While this cannot be excluded, based on our intermarket analysis from the other pairs, I believe that this is only wave 1 of wave 5, and that we're looking for a wave 2 right now, and wave 2s are usually very deeply retraced, so I won't be surprised if I see prices moving to much higher levels before we have another push much stronger to the downside for a more extended period of time. Of course, I don't expect something like that to happen again in a few hours, but I expect it after the end of this correction, prices to continue to the downside for several weeks and possibly months. And that let me show you here also the weekly chart, and here is what I mean. Those are drafts, excuse me about that. Wave 5 should extend much lower from here, and possibly we will have to make adjustments to discount in the coming days and weeks, as we see more price action and more price data to analyze. But overall, this kind of price action, as I mentioned, this SMA here provided the resistance that was needed. The reversal occurred. We are now back below all the SMAs, and that's a clear bearish signal, excuse me. And of course we see the reversal in the RSI, something that I also mentioned, that the 50 the neutrality area of the weekly RSI provided resistance, and we have a reversal. The oscillator is back below its SMA, and that keeps the momentum down for now, and we will see lower prices. Moving on the New Zealand dollar. Again, our expectations were correct. I'm gonna remove now with safety that alternative. I was talking in the previous video about the most common target of fifth waves, and this is the 61.8% Fibonacci extension of the distance traveled from the beginning of wave 1 until the end of wave 3, projected from wave 4. And this is exactly where we had the closing prices. We had a spike, but overall prices remained below this level. We had a reversal. The reversal is impulsive, and we have a strong rebound, something that we see in other currency pairs right now after the Brexit. Those SMAs now should provide resistance some more sideways movement is expected, and then a continuation of the downtrend. Let's see what happened to the Australian dollar. The loonie saw the much weighted rebound. We were talking about this rebound for some time, and with an update a few hours earlier, I also mentioned that it's gonna correct lower now. I believe that this correction is part of wave 4 within this wave 1 of a wave 3 of that degree, and despite this very deep retracement of wave 2, something that happened here also, I believe we will have a bounce very soon. And later today we have some oil related events, and I remind you that this pair is very sensitive on oil news and price, so I expect this SMA to hold. The other two are very low. This SMA will probably hold. We will have a bounce for a wave 5, possibly will be limited from this resistance here for now, and we'll have some more corrective price action, and then a continuation of the uptrend in the coming week. I'm gonna show you the larger time frame, to not the weekly but the daily, just to show you what I expect. This is a wave A, this is a wave B, 1, 2, 3, 4, 5, somewhere near these levels here. This level here is gonna provide solid resistance, and after that we have this level up here, somewhere here. I expect that this correction for wave 2 will finish, and we will have a continuation of the downtrend here, but this may take several days to complete, so more bullishness for this pair is expected in the near future. Okay, so now let's go to the Swiss franc. This is another pair that we're having difficulties counting because of this choppy price action and the several false breakouts of this rectangle, this range, sideways movement, name it as you like. And we finally had the break above it. I believe this is the real deal. I also, with an update a few hours ago, mentioned that prices will return back to test this range, this rectangle from above. This rectangle now will or should provide support at around this level, 0.9680, and a continuation of the rebound should follow. The RSI is clearly bullish here. I'm gonna skip the Japanese yen because here we were not correct with our prediction. I will have to reconsider the broader count, the count on the weekly chart also, and that takes time. So I'm gonna skip it for today. It is the last day of the week anyway. So you will get an updated report directly with next weekly report during this weekend. So stay tuned. So let's move now on gold. This is the other instrument that we were incorrect, believing that the uptrend was completed. Despite that, I still believe that this is not the beginning of a new trend. This is the last part of this wave 1, or possibly wave A. I don't know. We will see in the future. And as you can see, I haven't changed all the labels yet. But let's take a look here on the 4-hour chart. This rebound from the 144 period SMA on the 4-hour chart, and this large spike together with the large divergence here makes us believe that actually here was the end of wave 3. This was a wave 4, and now we have a rebound for wave 5, which now completes wave 1 or wave A, and thus we will see lower prices for gold in the coming days. We were wrong to think that wave 5 was completed here, and that was the beginning of our correction, of our downtrend, but we cannot be always right. That's impossible. So yes, this is the new count. You will get more information about it on the weekly report. And let's go on to oil. Oil dropped aggressively, and here another count with several problems. And when I say problems, I mean, let me explain. This move here looks very impulsive, and I don't know if this count of A, B, C for wave 2 is a little bit forced. The decline is also impulsive. Then we have a choppy price action to the upside with a very slightly lower than this high. So I'm counting right now as 1, 2, but really this is a very deep retracement even for wave 2, and that makes me question the validity of this count. I will probably think a little more during the weekend about it. As an alternative like that, I see possibly that being something like A, B, C, D, E for a triangle, and then a continuation. But in that case, this would not be a wave 1 because wave 2 cannot be triangles. I certainly need more time to reevaluate this count, but the point here is that the momentum is bearish. Lower prices are expected whatever the count, as long as we stay below the $49.40 dollars. And that's all for oil. Let's move to the German DAX. The German DAX was a mess yesterday when I was posting my video prior to the Brexit event, because this rebound here, as I was talking yesterday, looks impulsive, and it is again very near the high of the previous wave, and that makes it a little bit unlikely for this to be wave 2. I started looking for alternatives prior to the event. I didn't have time though to post them, and then Britain left the EU. The index opened with around 1,000 points gap, and that didn't invalidate this scenario, so I'm keeping it on the chart right now. I will certainly consider alternatives during the weekend, and I will post it on with the new weekly report next week. But it is also probable that this whole part is a wave B. So wave B didn't finish here, but here with a truncation. I don't know. I need more time for that. The point is that looking at the higher time frame here on the weekly chart, we had another rejection. I mentioned that on yesterday's video. Another rejection on this SMA, a break lower. We will certainly, let's not say certainly, we will most likely have a close below all SMAs that is super bearish, and that opens the path for a continuation of the decline that will target this level at first. And if it's broken, then this level is 61.8% retracement of this wave 3 that coincides with the lower boundaries of this multi-year channel. Also a very good target for this decline. Lower stocks suggest lower prices for the for oil suggest also stronger Japanese yen, and those are some things that I have to take under consideration for the next weekly reports, and you will get a detailed explanation and detailed presentation of my opinion on them during the weekend. Let me show you now my account on the S&P 500, and although we didn't see this on the spot index, here is the futures contract of the S&P 500, and the problem here with this count again is that the rebound touched the high of the previous high here at 21.19, so this could not be a wave 2 for sure. I'm currently counting it as an A, B, C, and I suspect that wave C will be much bigger than wave A. It's not the first time that S&P 500 can do that, will do that, excuse me. This level here should provide resistance. We see prices struggling to move above it, and we certainly don't want to see prices moving much higher than the 2080 level. This level should provide solid resistance, and a continuation of the downtrend should follow. But I will go through I will go into more detail during the weekend for this instrument also to see. Here we see that the reaction happened at the 144 period SMA on the daily chart, and that could also mean that the correction is finished here. I don't know, that's why I'm saying that there are a lot of things that must be taken under consideration before deciding which is the correct count for this instrument too. But I will also take a look on all the waves since this rebound to see if, for example, this is not a wave 4 and this is a wave 5 of some other degree inside here. So this is just the beginning of the downtrend of the larger correction, let's say. For now, all I have to say is that the momentum is bearish. Prices should reverse lower. This is the older count on the 4-hour chart, so they have time to change it. But the momentum is down, and prices should reverse lower from here, and we'll see much lower prices in the near future. Stay tuned during the weekend for my final reports, weekly reports, and my final presentation of my final selection of what kind will be my primary. And have a nice weekend. That was a very intense week. I liked it a lot, and see you next week. Thank you for watching.